Hey, very good morning, guys. You're most welcome to today's episode of the Market Snapshot. Today is the 6th of December, 2023, and I hope you've all been having an amazing trading week so far. We have a lot that has been taking place in the markets, and of course, I think the main highlight, of course, for today was yesterday's job openings report, which brought a bit of shift in a narrative in the markets, where we got a number of course, commentators from Bank of America and also from Wells Fargo, indicating that the job openings might accelerate the possibility of a rate cut from the Fed, in hopes that a slowdown in the hiring sector could point to some kind of need for rate hikes. Yesterday, the job openings report came in much lower than expected. We saw a decline from 9.3 million job openings to about 8.73 million job openings for October. And of course, the result and effect on the market is we saw fairly some kind of disconnect, where we're expecting to see dollar weakness, but instead we saw some dollar strength, and risk-on sentiment actually persisted on the different assets. We saw the indices yesterday indicated some fairly strong strength. We got an all-time high on the DAX. For those of you that are trading the DAX 40, or if you're trading it on FX Pesa, you might have seen that it reached its all-time high. So there is some kind of risk-on sentiment. And of course, going into the NFP, which we have on Friday, we could see this risk-on sentiment intensify. Yesterday, we also got a report from Moody's indicating that they had actually downgraded the credit outlook for China from stable to negative, but that, of course, did not change the direction of the risk-on assets. I think it was only EURUSD and GBPJPY that pulled back. The indices still stayed fairly strong. We also saw an all-time high on the DE40, which reached its highest level, both on the roll and on the futures. We saw it going to unprecedented levels. Today, we have the ADP report, which of course is the main highlight for today. We're expecting that report to give us some guidance of how the private employment stats have been looking like for November. We could also be able to see how the non-farm or the non-farming industry has also been performing. So if we look at the calendar for today, we have had quite a bit of data coming out. The Chinese economy, despite Moody's guidance, still looks fairly strong. There's some kind of disinflation trend we are seeing for most of the economies, and I think that could also be one of the reasons why we are seeing some strength for the pound and for the euro. The strength is largely because of that disinflation, which of course is providing the currencies a much bigger real value. So, of course, the pullback that we saw yesterday on the euro, on the pound, and of course on a few other assets could be because a lot of them were rallying from the CPI of last year, and they are trying to there's some kind of profit taking that we are observing in the market. But that does not mean that the risk on sentiment is done. It's still there, and we're observing it on most of the assets. So looking at the data for today, of course, we've had some PMIs coming out from Europe, which of course has provided some strength for those of you that are trading. If you're trading the cross currencies that have the euro as a base currency, you must have seen a lot of strength there. In the afternoon, just I think a few hours before the open in the US, we are going to get the ADP report. So ADP is the automatic data processing report for the private sector in the US, employment in the private sector, plus also any other industry that does not have farming. So anything aside from farming, we can expect to see what that will do to the market. We're also getting the interest rate decision for Uganda. We're expecting it to come in line at 9.5%. We are getting also data for the exports and imports from the US. We'll get an idea of how the trade balance is doing. Remember the much bigger decline on trade balance, or a much bigger decline on trade balance is usually bearish for a currency. So always whenever we get more exports than imports, that usually is good for a currency. Yeah. But we might not see that much of a reaction on the dollar for this data. I think the reaction most probably is going to come from the ADP report, which of course will set the pace for how the NFP for Friday is most likely going to be. So when you look at the forecasts for ADP and for non-farm, they are similar. They are both expecting an increment there. The ADP, we're expecting the employment change to move from 113 to about 130K. For non-farm for Friday, there's a forecast from 150 to 180. So this, of course, should provide some bullishness for the dollar. And I'm already seeing that a lot of the risk-on assets, a few of them have reversed. And of course, if the indices also reverse today, then we can now say that the sentiment has now shifted over to risk off. But for now, risk on is still fully intact. For those of you that are trading the Canadian dollar, you might also be interested at the BOC rate statement, which is expected at 6 p.m. today. Most of the central banks seem to be providing some guidance that they might be coming to the end of their rate hikes. We've been getting that guidance from the Bank of England, same thing also from the ECB. They seem to be at the end of their rate hike cycle. The only challenge now is that there is some kind of a disconnect on the different data that we are seeing. Much as we are seeing a disinflation trend for most of the big economies, we're now seeing that aside, I think, from the US, the others are now having really, really slow economic growth. Again, not reflecting with the currencies because a lot of them are still at very high levels. So looking at the crude oil inventories that we're expecting today at 6:30, last week, we had the OPEC meeting, and OPEC guided its members that they expect that they should have more supply cuts, but that has not reflected in the oil prices. There's still a kind of downtrend that we are seeing with crude oil and also with Brent UK oil. So should we get a much higher crude oil inventory number here, then we could expect the crude oil price to even sell even more. Now, the other thing is when you look at the price of oil, it usually sets the pace for a potential recession because all previous recessions have always come with declining oil prices. So we're not so sure whether a recession is likely to come for some of the countries like the US and also for these other countries. But if it does, then the oil price might be pointing to that. We're also seeing the inversion for the US is quite steep. I think you can see that the shorter dated notes are much, much higher than the longer dated notes, which also gives us a strong indication of a recession. But the data, again, does not really indicate that. I think the only data we have been getting for the US that is pointing to a recession is the labor market, which of course is not as strong as the others. But GDP is strong. Inflation is coming down quite strongly, not yet in negative territory, which is a good sign. Yeah, so that's pretty much it. We can cross over and just look at some of the news that we have been getting out from yesterday. So for yesterday, we had some really good comments from Wells Fargo and from Bank of America. We are seeing here that they provided us some really good guidance. Here we are seeing that Wells Fargo CEO said that there are some risks to the downside. They are saying that the best case for the US economy is a soft landing, so they're not expecting it to have a hard landing as earlier expected. Could also be one of the reasons why those of you that are trading NASDAQ and Dow, you're seeing them at really high values, not too far from their all-time highs, by the way. Crossing over to Goldman Sachs. Goldman Sachs says here that the chance of a softer landing for the economy is much higher in 2024. They're also saying that the US economy has been more resilient than expected. This is true. Going by the data that we have been seeing. Now, I know as traders, you might ask yourselves why you're seeing a lot of the commentary from some of these big banks on the US economy being strong, but yet again having a declining dollar. So it has a lot to do with the positioning by some of the money managers and of course the banks and the different products that they trade. But also, if you look on the charts, you'll be able to notice that a year before the US elections, the dollar always starts declining. So it could be that we should potentially see a weaker dollar. So Goldman Sachs also is saying that I expect inflation to be stickier in 2024. This is true. Since we are going into an election year, it's likely that's what's likely to happen. So let's cross over to the charts and see what's on the charts. So before I go to the charts, I just want to show you you guys gold from here. My gold actually gapped, so it's better if I show you what's happening with gold here. So for gold, we're looking at it on a 1 hour. I'm sure most of you were surprised with a spike that we got. So this spike which we had was actually a reason. The reason behind it was a pileup of call options. And of course, it squeezed traders out. When you have more people buying than selling, usually you find the market moving like this. It will usually try and squeeze, okay? And if you shorting the market, most probably you'll be squeezed out. So the reason why we saw gold falling from this high was because it could not sustain levels up here. And again, if you trade price action, you'll notice that whenever prices are trading at much higher levels, or some traders call it premium levels, normally there will be some kind of reversion back to mean or back to average trading range. Okay, so that's what we saw on gold. And it happened quite fast, as you can see. We were back to our Tuesday levels just in a space of 1 day. Okay. Now gold, I'm expecting it to move higher, possibly back to this level here. And this could be just for some kind of, buying back from this big drop that we had. The structure is still looking like a downtrend. Quite clearly, we saw a break right here. Of course, now it's this level here that failed to break. And I'm expecting if gold tries it again, most likely we're breaking it and we're going to continue further lower. I don't expect gold to move back to its previous all-time highs, not this one that was made on Monday, but the one that was made from 2020 and 2022. I'm not expecting it to move back to this level here, unless we have some stable liquidity that can sustain it up to these levels here. But if we don't see that, most likely gold is going to start its downtrend. We are going to look at silver, but from the MT5. So let's cross over to the MT5 and look at some other assets. So those of you that have been trading JPY pairs, you notice that a lot of them are now on a downtrend. As you can see here, we had a nice descending wedge on GBPJPY. It broke right at the top of that descending wedge and has now started it's now in a very clear downtrend. Okay. So now for GBPJPY, I'm expecting we should see a much stronger move lower, possibly taking us back to these levels down here. Now, guys, one thing that I need to mention is this level which we have of 1891, okay? The one up here is actually all-time high for this currency pair, and it was likely that it was not going to sustain price action there. So you can see that descent was quite strong, and I'm expecting that we should have a much further pullback, taking us much lower here. Looking at how GBPJPY has done so far on the year, it's actually quite high for the year. If we go on the higher time frame, we'll be able to see that. Just a moment. My chart is a bit slow. Let's give it a few moments to load. Okay, so this is the higher time frame. So you can see for 2023, I think by far and large, it's been a bullish year for this pair, and it's up 20% on the year. So most probably December is going to be a downtrend for this pair. And fundamentally, the reason for this pullback is because Bank of Japan is expected to come to the end of their negative interest rates. And of course, the impact for that on the currency is that it will start to gain value. The earliest for them to switch to a new rate regime is going to be January. So January is when they have their next meeting. Should they indicate to us that there's a possibility of them looking at moving away from negative interest rates, GBPJPY is going to pull back much stronger, and you'll be able to see that even with even with the other currencies. I think USD/JPY has already begun its descent. So let's cross over to GBP/USD. So for GBP/USD, let's look at it on the 1 hour. Okay, so for GBP/USD, we failed to break this level here quite clearly. We're still in an uptrend. If you look at the uptrend from here, where we broke above this area here, we got into a rising trend. That was towards the end of October. We're still in that uptrend, but now we seem to have had a pause in that uptrend, and this could likely be because of profit taking. Plus also some traders are cutting their long bets on the pound in anticipation of some kind of hawkishness from Powell next week. Next week on 13th, the Federal Reserve is going to have its last meeting of the year. They will have 2-day meetings, and then they will sum that up with a conference on Wednesday. And a lot of traders do not want to get caught in long bets on the pound, because if that happens, then they might get trapped. So they want to get out of their long trades and possibly kind of protect themselves from any downside for the pound. So I'm expecting that we could get a death cross here on the 1 hour. The moment we do that, then we are going to get the pound possibly moving much lower and touching this descending trend line here. Crossing over to Dow. So for Dow, we touched the peak or the highest point for the year. That was on Friday, following dovish comments from Powell. But you can see that ever since we touched this peak, we have now started creating lower highs. And I'm thinking, despite yesterday's strong or weak, yesterday's weak job openings report provided much further strength for the indices, because it confirms the speculations that the Fed will need to cut rates to avoid a slowdown in the hiring sector in the US. So I'm thinking that, of course, will help the Dow to possibly move higher. I know that does not make sense, that the indices should be buying based on a slowdown in hiring, but sometimes risk on sentiment does not, mind about the news. It will still rally. The other thing that I need to mention is we have also been getting comments from the CBOE. They have been indicating that there are still a lot of call options on the stocks, and also for some of the indices, which are keeping the indices quite high. And I'm thinking that it will take some time before we see a downtrend. It might stay choppy here before it starts pulling back. But for now, we should potentially see how it does. If we get a very strong ADP report, then it will, I think, provide some strength to the dollar, which of course in turn will provide weakness for this Dow. So crossing over to Euro USD. So for Euro USD, we've almost cut into half of this bullish FVG here, as you can see. We drew this, I think, 2 weeks ago, and we're saying that there was a sell-side imbalance which was created when the market moved higher from CPI. And Euro USD was, I would say, valued at a really high level. It had to pull back. And I'm thinking now, we are now 50% into this FVG. We are most probably going to close the rest, likely maybe towards NFP, and we could have Euro USD having one more move lower. Keep in mind that despite that, Euro USD is still in a very strong uptrend. You'll be able to see this on the 1 hour. If you go on the 1 hour on Euro USD, you can see that the uptrend is actually still strong, still stuck in a very nice range there. And I'm thinking, of course, with a death cross we had on the 1 hour, gave us some strong indication that maybe the euro is going to stay fairly weak. We should see it moving lower and lower. And again, the structure is quite clear with the Euro USD. We're having, lower highs and of course lower lows, quite clear here. So we should see it selling into this FVG here. Again, just like I mentioned for the pound dollar, the traders are going to keep their euro longs on the low. And of course, the reason why they're doing that is in case Powell is hawkish, they don't want to get on the wrong side of the market. So they are trying to cut down on those bets. Seeing that EURUSD was trading at very high levels, it's likely that impending a meeting from the Fed, they will not want to keep their longs here. They might want to cut down on them. So that's why we are seeing that pullback. So for silver, before we wind it up with the NASDAQ, silver, same thing with gold, peaked around here, but silver did not make an all-time high like gold. It's actually trading about its peak that it had when gold also peaked at its all-time high was about $5 below its highest point, which was, I think, $30 an ounce. So I think silver is showing a bearish flag here. So we might break out of this flag that could take us back to this level here. And of course, if we fail to do that, then we are going to come and break this area here and create new structure to the downside. So if you look at this clean range on this end, which you had on the 24th of November, you can see how silver broke out of this range and created a new area here, moved quite strongly to this level here. So we should have it moving lower and lower and lower. Now, the other thing, of course, is that a lot of the commodities seem to have peaked for the year. We are seeing a lot of them pulling back. If you check on commodities like coffee, like orange juice, a lot of them are trading at very high levels. So it's likely maybe traders are now cutting back on their long positions, and now they are doing some kind of profit taking, and they are repositioning for next year. So let's just wind it up with a NASDAQ, and then I can look at your questions. In case you have any questions, let's type them in the chat and I'll be able to handle them. So for NASDAQ, let me look at it on TradingView. So this is what NASDAQ is looking like. This is on the 1 hour. So NASDAQ peaked at 2023. Rather, it peaked at 16,167. This is about 500 points from its all-time high. But ever since it peaked here, NASDAQ began its downtrend. Regardless of the comments you have been getting from the Fed that have been pointing towards some kind of hawkish dovishness, NASDAQ still did not buy. And this is likely because a lot of the stocks that in NASDAQ reached their all-time highs. And since a lot of them cannot sustain trading at those levels, they pulled back. And I'm thinking that is also providing some pullback for the NASDAQ. So I'm talking about the heavyweights, the tech heavyweights. So Apple reached its all-time high. Microsoft also reached its all-time high. If you check on NVIDIA, same thing we're also seeing. So the structure is quite clear for the NASDAQ. It's pulling back. And I'm expecting that since we've broken the 200-day moving average, if we fail to stay above it, then it would mean that we could see a much further pullback. I don't expect the pullback on NASDAQ to be a lot. It's likely that it will still stay ranging within this area here, since it's in a bull market, but the pullback is imminent for it. Okay, so let's just look at the questions we have. Yeah. Okay. Hi, Khalid. How are you doing? Hi, Sam. Agnes, good morning. Hi, Milliam. Hi, Sam. Sam, you're saying hello. How is a person supposed to tackle the market when the news come out negative, one positive at the same time? Like, for the example, yesterday, USD news at 6 p.m. Okay. Sam, I don't know how to help you with that one. I don't know. Now, you see, the thing is, you can't trade every single data release. You can't link every single data release to the market. Sometimes the market is just trading on its own without linking it to any news. I think you might want to focus on the high impact events. Those are the ones that usually you will link, like yesterday's job openings. Now, yesterday's job openings we didn't see what we saw with the market was not what we expected. Having weak job openings should be rather bearish for the dollar. But we saw pullbacks on the euro, we saw pullbacks on the gold, we also saw pullback on the pound, especially after the news hit. So I think it would be better, yes, you can follow news, but only the high impact news. but you might also want to focus on the structure that the market is doing. Is it a downtrend? Is it a uptrend? What are you seeing with your charts, and what is the technical analysis telling you? Yeah. Yes, hi J Squad. How are you doing? You're saying, could you possibly do a crypto talk? How we could benefit from the coming rally from BTC? Yeah, so of course BTC is available on BTC USD the currency pair is available on FX Pesa's platform. So you can trade it. You can trade it. Of course, there have been a lot of indications that the Bitcoin could be starting a new rally. And of course, that is because of the upcoming approval or potential approval of its ETF that is in January next year. I think around the 10th of January. Maybe if Rufus is on, he can give us the exact day, but it's likely around 10th of January. Once they give the approval for that ETF, one of course, the expectations is that there will be new money flooding into these cryptocurrencies, most especially Bitcoin. Yeah, so of course, you can trade that opportunity on FX Pesa. Just simply go to your MT5 and look for BTC USD and look for buys on Bitcoin. If you expect maybe that could benefit from there. Could you possibly help me analyze on a 15-minute time frame? Explain and show the example, the take profit and stop loss kindly. Of course, I might not be able to do that at J-Squad given the time, but maybe what I can advise is when you're setting take profit and stop loss, please, you have to make sure you set it based on the potential structure breaks. So it's likely that if you get a failure to break structure, then of course your stop loss should be somewhere there that in case the market breaks below it and moves back up, you can, avoid yourself from losing money by having your stop loss. So stop loss is important, and I advise that you make sure you have it whenever you trade. Which currency mostly moves the same way as gold? Okay, I'm not so sure what you mean there, Sam. Which currency moves the same way as gold? Okay, there's no particular currency. I think maybe your focus should be on which one moves opposite to gold. So that one would be the US dollar. So whenever the US dollar is gaining, gold is normally losing. And whenever that US dollar is losing, gold is normally gaining. Yeah, so you might want to trade them side by side. But in this case, you don't follow gold with a dollar, you follow it with a dollar index, which of course is used by most traders when they are gauging strength. Do you expect the EU to gain strength after news today? The EU, of course, again, JP, luxury travelers, we are saying that EURUSD is in a downtrend structure, quite clear, and it's likely maybe that would continue, especially since traders are trying to cut on their long positions on the likelihood that Powell closes up the year with some hawkishness. Yeah, so that's it. If there are no other questions, guys, I wish you all an amazing trading day. Let's meet next time for the snapshot. Cheers, guys, and happy